Well, the market today was crazy. It was a roller coaster session that saw stocks, well, they initially swooned right to that disappointing jobs report that missed Wall Street consensus by a mile. So we couldn't even rationalize it. You know how we usually celebrate mediocrity? We couldn't do it today. That jobs report was a dud. Here are the numbers you need to know. 160,000 total jobs. 171,000 were from the private sector. The labor force participation dipped. It went back down 62.8% from 63%. The government unemployment rate at 5%. A more realistic unemployment rate, the U6, it's at 9.7%. There were 19,000 fewer jobs in February and March, so that was revised lower. And 362,000 people left the labor force. But as the session moved along, stocks found some footing. Investors actually started to pivot toward these blue chips for comfort. The Dow Jones Industrial Average actually held above its 50-day moving average. That is a bullish signal. Perhaps the mood changed also with the realization that even slightly better wage growth in this report is not enough to spring the Fed into action next month. And now, in fact, a lot of scuttlebutt that we probably could cruise through the entire year without any rate hikes. The Nasdaq avoided another down session, but let's face it, that was a little bit misleading. That composite is still in trouble, and it sports really ugly internals. If you look at the market breadth, it underscores the cautious nature of the session. There were more than 100 new highs than lows on the New York Stock Exchange, but 184% more new lows than highs on Nasdaq. Late in the session, around 3 o'clock, we learned that consumer credit surged by almost $30 billion, 10%. That's the fastest pace since November of 2001. It was driven by credit card use of 14%. Now that is the fastest pace since July of 2000. Some may point to this as a sign of the wealth effect kicking in. I can see the Fed giving themselves high fives right now, but some may also point to this as a sign that people are using any means necessary to make it day to day. Now for next week on the upside, look for the Dow. The big test is 18,100. A breakout through there, and I got to tell you, everybody needs to have something. You need to be involved no matter how you feel about the market. That would be a major breakout, so get your buy list together. Make sure you check out my website, too, for the twice-a-day commentary, wstreet.com. It is free.